Hi everyone, today let's take a quick look at the jobs data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the US economy jumped by 206,000 jobs in June, but the unemployment rate continues to tick higher. We hit the 4 handle last time and now we are at 4.1, the highest level since October of 2021. Definitely concerning. As these unemployment rates continue to rise here, that is going to be a negative marker for markets. Of course, that will bring interest rates down, but we'll see how this plays over the next couple of months. If this continues to rise here, that is a very bearish indicator for the economy and a higher likelihood of a hard landing. And then looking at the jobs numbers, 206,000, slightly less than the previous read. Again, not super strong there. We did get some commentary from the chief economist from Goldman Sachs saying this is a soft landing kind of report. I'm not sure I fully agree with that. This seems like a harder and harder landing every jobs data that we get. And you can see this consistent rise here on that unemployment rate. Just about a year ago, we were in this 3.4 to 3.6 range, and now we're sitting well above that 4% range. This is probably going to trend higher, at least to the 4.5. And again, that is a bearish indicator for markets, in my opinion. And you can see a large percentage of that jobs data was 70,000 government jobs. So if we did not have all of those jobs, it would be a much weaker jobs numbers, in my opinion. And I think markets would have reacted more negatively. Moving over to fear and greed, we were at a 54, up from a 44 the previous close, 48 a week ago. So much stronger here, continuing to step higher every day. It seems like still extreme greed on momentum, no change on strength and breadth, continuing to look like fear. Did see slight steps higher, but not enough to get him out of that extreme fear category. Volatility also seeing a slight step higher, nothing crazy there. And now we're back into regular greed on both safe haven and junk bond demand after that jobs data report we got today. Moving over to the charts, looking at the S&Ps, again, another straight up day. Pretty wild, 0.58% on the day. Momentum bullish, RSI still bullish, still overbought conditions. You can see momentum on these subsequent pushes has been a little bit lower, but price action is king. Another very strong push. It is worth mentioning we did see some selling price action there on that last hour of the day, so a little bit concerning going into the Monday session, but nothing crazy. You can see that upper trend line here on the daily chart sitting up around 559.69. Then moving over to the 4-hour chart, you can see we hit that upper band like we expected to, and we overthrew it pretty strongly. Upper ATR band 553.69, and you can see closing price 554.12, so we're above that upper band. Don't expect a ton more upside potential. ATR trailing stop 549.29, so still in this bullish trade as we continue to see this grind along that upper band. Definitely concerning. I think most of the upside, at least in the short term, is complete. You can see pushes like this, hit that band, grinding price action, hit the band, grinding price action. So we'll see how it plays. Could be a pullback, could be grinding, but we haven't seen a breakdown of any kind yet. Moving over to the NASDAQ, very similar thesis, 3 straight pushes. Again, fading momentum on each of these, so it seems like starting to see the top of this move. You can also see we did get above that upper resistance. I did expect to hit that today, and we did, but we overthrew it more than I would have expected, and you can see that on the hourly. Broke above, retested. Again, big volume at the end of the session, selling pressure, continued after hours. As that momentum faded, stronger bearish price action after hours. But on the daily, of course, everything still looks bullish, so no change there. And looking at those ATRs here, you can see upper band 492.73, trailing stop 489.28. So basically the same thesis. It's also worth mentioning that 8 EMA is right at that upper band, just a few pennies short of it. You don't see that super often. That has been a very strong push over the past 3 days. And we'll see if that can hold up, but really same thesis as the SPY. Once you hit that level, it starts to slow down pretty substantially. Strong push to the level and then grinding after that. Moving over to the Russell and the Dow, the Russell was down 0.48, not great. Took out this level, still holding that 144 at 235. As long as that holds, we're still in the trade. If this structure breaks here, that's going to be bearish for me. And then looking at the Dow, 0.22 to the upside, 392.44 as support. Held that level again, closed at the high, which is interesting. 398.76 is your upper resistance. Momentum, not great. RSI, slightly bullish. So seems like this is still a bullish trend, and it does look better than the Russell. Moving over to the Mag 7, look at this chart. 4 bullish days in a row, super powerful, 2.62%. Still looking at that price target, 289.38. I didn't think we would get here so quickly, but it has been an aggressive push over the last 4 days. So just a couple of dollars higher now, 290.01 is the price target. So about 1.5% higher. Expect to hit that on the Monday or Tuesday session, and then we'll see what happens from there. Moving over to Apple and Microsoft, here you can see both of these had a very powerful day, 2.16 and 1.47%. We talked about this on Apple, closed at the high, closed above all these previous wicks, got a very strong push into price discovery, momentum bullish, RSI bullish. Who knows where Apple's going, could continue higher from here. And then Microsoft, big breakout above the trend, held the level, closed on the high. Your next level here is 488 on Microsoft. That would be the next trend resistance. We haven't been to that level here since March of 24, so it's been a couple of months. You can see that dip structure. Now we're rallying back up to those trend areas. So see how it plays out. Still price discovery, still new all-time highs for both of these companies. Moving over to Tesla and NVIDIA. Tesla, another strong day, 2.08%, massive momentum, absolutely amazing. I don't know if I've ever seen a momentum level that high at 7.06, going straight up. 255 is the price target. We talked about it on the previous video. Still think it's going to get there. And then NVIDIA has taken a breath all week, last 2 weeks really. Momentum fading, RSI still looks bearish, so the market leader is no longer leading markets, but it seems like the rest of the Mag 7 has really made up for this NVIDIA weakness, if you could even call it weakness, over the last week and a half. Moving over to Meta and Amazon, look at this candle on Meta. Absolutely massive, on strong volume, 5.87%, huge breakout, all-time highs, new all-time close, new all-time wick highs as well. Massive week, and you can only assume that this is going to continue to go higher. Did hit overbought conditions. And then Amazon, slightly bullish, 1.22%, which is a good candle, but it's really overshadowed by that Meta candle. So all of the Mag 7 really looking very strong. And as long as these continue to look strong, markets are going to go higher. Moving over to staples and discretionaries, staples coming in hot with a 1.23%, close to that 77.5, got back above all the EMAs and SMAs, so that looks a little bit more bullish. It's above the RSI, momentum swinging to bullish. If this breaks 77.50 and pushes, you would expect a 79.90. We've seen this fail the last couple of times, so seeing candles like this ends up breaking down, so critical level watching that. And then discretionaries hit our level, 89.38. High of day was 89.42, so almost to the penny. Touched that area as resistance. Overbought conditions, momentum still bullish. Next level here is 193.82. These are not all-time highs, and then you have resistance from these trends here in that same zone. So still looks very strong with Amazon and Tesla looking strong, but we are getting to some pretty overbought conditions. Moving over to oil and gold. Here you can see oil again taking a breath. It's been sideways for about 3 days now after this really powerful move here. And then gold, 1.35%, coming off that support. Still have the price target of 225.09. Still think it's going there. Momentum bullish, RSI bullish. Just looks really strong. Should give you another $5 of upward movement. Moving over to RIOT and Marathon. These really haven't done too much over the past couple of days. RIOT did catch a bounce, 0.73. Still at the trend resistance. Still looks weak. And Marathon, another gap down and fall, 3.86%. So the one up candle was very strong, but couldn't hold any of those gains, and we're right back into this consolidation. So neither of these look like a super good opportunity at this point. Moving over to Breadth, you can see the wick down and the bounce. So it seems like some support came in here today, even once we tried to fail a little bit on Breadth. RSIs on both of these still look weak. Momentum still looks weak, but price action has hung in there pretty well, and we'll see how this plays over the next week. Still looks neutral for me on both of these. Moving over to the dollar, we've had 7 straight days of bearishness, and that jobs data number was not good either. Big down day, 0.24. 200 SMA sitting at 104.49, probably headed there over the next day or two. Support for me, 104.41, and you can see this on the hourly, just straight down. Very consistent downtrend. Does not look good at all here for the dollar, which is powerful for equities. Moving over to bonds, very strong day here as well, 0.41 and 0.83%. Momentum swinging to bullish. Both of these looking like they're going to hit that next target, 94.82. And then look at TLT, pushed right up to that 92.82 level. We're through this trend line now. Let's go ahead and extend that out. We're right to that trend line now. You can see hitting that as resistance. If we can get above 92.82, we're probably headed up to this range around 95. I like this still. Held a higher low, looks very good, and that jobs data is strong for bonds. Moving over to volatility, move index continues to crater, makes sense with bonds rallying. The interesting thing here is we're at all-time highs and we're having markets rally really aggressive, but then we got a bounce here on the VIX, 3.23%, momentum swinging to bullish, RSI swinging to bullish, so something to keep an eye on. Might see another wick here to the upside, and if this continues to gain steam, eventually markets will move to the downside as the VIX continues to move higher. Moving over to my accounts, you can see I came up just about 70 cents short of that 140 level. Love to hit that on the Monday session if we can hold up. IWM has really been struggling. I think I need to do something different here again. I was able to make up some of the money over the past couple of weeks, which has been working well, but with these down days of about 0.5%, that's a little bit more than I can absorb. And then you can see here, still have a 201 call for the Monday session. And then looking at the Qs positions, I have a put for Monday, 493, got that for 46 cents, just being a little cautious there. And then I have my normal covered call, 488, and then I rolled out that call here to 500 for 236 credit. So basically flat on that, and then obviously deep in the money, 488 here for those 200 shares. So still in a bullish position, 126 deltas, and then 27 deltas here on my IWM position. Overall bullish, again being cautious. Let me know down in the comment section what you think of the jobs data and the new unemployment rate of 4.1. Is this a canary in the coal mine, or can markets continue to rally despite the weakening jobs data and weakening economy? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.